Goldman Sachs just became the largest institutional holder of XRP, one filing $153.8 million. At the same time, Standard Chartered slashed its XRP price target from $8 down to $2.80. One bank is buying, another bank is backing off. Both headlines dropped this week, and by the end of this video, you'll know exactly why and what it means for anyone holding XRP right now. If you're holding XRP or thinking about buying, watch this whole video. I'm covering 5 things that are trending right now: Goldman's position, Standard Chartered's downgrade, Ripple's new stablecoin partnership, Ripple Prime going live on DTCC, and where XRP's price actually stands today. Let's start with Goldman Sachs. In their latest regulatory filing, Goldman disclosed a combined $153.8 million position across 4 spot XRP ETFs. That makes them the single largest institutional holder of XRP on Wall Street, right now. Not a rumor, not a prediction, a filed, documented position. When the biggest investment bank in the world builds a position like this, it's not speculation. It's a signal that XRP has moved from a retail trading asset to something traditional finance is actively allocating capital toward. So why would Goldman go all in while the market looks shaky? That's where the next story comes in. Standard Chartered has been one of the more vocal banks putting out price targets for XRP. Their previous call was $8. This week, they cut that target down to $2.80. The reason? ETF inflows have slowed dramatically. When XRP ETFs first launched, they pulled in $1.3 billion. In 2026, those inflows have nearly stopped. That doesn't mean XRP is done. It means short-term demand isn't matching what analysts expected a few months ago. Standard Chartered's new number is more conservative, more realistic, but it's still more than double where XRP is trading today. Right now, XRP sits at roughly $1.04. Here's the story that just broke today. Ripple has joined Open USD, a stablecoin initiative backed by Visa, Mastercard, and BlackRock. This isn't Ripple's first move into stablecoins. They already run RLUSD. But joining Open USD is different. It puts Ripple directly inside a project with some of the biggest names in global payments and asset management. That matters because when Visa and Mastercard are involved in a project, that project gets direct access to banking rails and payment networks most crypto companies never touch. For the XRP ledger, this is a real opportunity. It opens the door to more cross-border payment volume actually running through XRP's infrastructure. Next, Ripple Prime just went live on DTCC. If you don't know what DTCC is, it's the institution that clears and settles trillions of dollars in Wall Street transactions every single day. When a Ripple product integrates directly with DTCC, that's not a partnership announcement, that's infrastructure-level adoption. Traditional finance isn't just talking about XRP ledger technology anymore, it's plugging it in. This story is trending hard in crypto circles right now, and a lot of investors are calling it one of the strongest long-term bullish signals of the year, because it's not marketing, it's a functioning integration. Now let's talk price. XRP is trading around $1.04 today. Over the last 24 hours, it's down about 1.7%. Over the past 7 days, it's down roughly 6%. But here's a detail most people are missing. Wallet growth on the XRP network just hit a 3-month high. Active addresses are increasing at their fastest pace since March. That growth is helping defend the $1 support level during a broader leverage shakeout across crypto. So while price is dipping, the number of people actually holding and using XRP is climbing. Big holders are staying confident. Smaller, leveraged traders are the ones getting shaken out. Now let's put this all together. Goldman Sachs, one of the most conservative banks on Wall Street, just built the largest institutional XRP position out there. Ripple is integrating with Visa, Mastercard, and BlackRock through Open USD. Ripple Prime is live on DTCC. Wallet growth is at a 3-month high. Every one of these signals points long-term positive. But short-term ETF inflows have cooled off, and analysts are adjusting their price targets down to more realistic levels. That tells you XRP is in a transition right now, shifting from pure speculation toward actual utility and institutional infrastructure. If you're only chasing a quick price spike, this phase is going to test your patience. But if you're paying attention to what's actually being built, this is exactly the kind of news you want to see. Here's the bottom line. Institutional confidence and short-term price predictions are two completely different things. Goldman's massive position tells you Wall Street is taking XRP seriously. Standard Chartered's downgrade tells you the market wants patience before the next leg up. So which side are you on? Goldman's confidence or Standard Chartered's caution? Drop it in the comments. Like this video, subscribe, and hit the bell so you don't miss the next XRP update the second it breaks.